Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin economic calendar with the information you need to start the week off right in Bitcoin. Today is Wednesday, December the 28th, and we want to wish anyone who celebrated over the weekend a very Merry Christmas and Happy Holidays. As you know, this is the last week of the year, and as such, we have a very special episode for you today. Now, we know it's been a very wild year so far. We've had an active war, elections in the US, central banks across the world raising interest rates, and some spectacular bankruptcies, which has all made 2022 one of the most difficult years to navigate for investors. Now, while no one could have predicted what happened in 2022, based on what we know today, we wanted to have some fun and make some predictions for 2023. And we will check back on these next year to see how we did. So without further ado, I hope you enjoy, and please give us your feedback in the comments section. So onwards to the show. Now, before we get into the predictions, let's check in quickly on Bitcoin price. And we see that it is currently trading at 16,586. It's been on this relatively tight range over the last 4 to 5 weeks. And this may continue until the end of the year since there is very little volume generally as we go into the new year. But look for volatility to pick up early in the new year. And we'll touch on that briefly. We did cover that on our last week's issue. So check in on that if you'd like to see what we could expect for Bitcoin early in Q1. But now onwards to the predictions. So prediction number one. The prediction number one is that the market cap of the 4 major stablecoins will surpass that of Ethereum and will become more than 50% of Bitcoin's market capitalization. And for that, let's look at some data. So the graph you have on your screen right now, the orange line shows the aggregate market capitalization of Bitcoin. The black line shows the aggregate market capitalization of Ethereum. And the green line shows the overall or aggregate market cap of the 4 major stablecoins, the 4 top stablecoins. And those are USDC, USDT, BUSD, and DAI. So as we see here, the lines are pretty evident in that the green line, which is the stablecoin line, is getting closer and closer to the black line, which is Ethereum, and also to the orange line, which is Bitcoin. So in short, stablecoins are solving a problem, and it shows. It is the sector within crypto that has best withstood the recent market downturn. We've covered this a few issues back. If you want to take a look at how stablecoin, this called stablecoin, the new crypto's new safe haven asset is the title of that issue if you want to take a look at that. Now, as the market capitalization of crypto assets have plummeted, stablecoin balances have remained strong. So much so that the market capitalization of stablecoins briefly surpassed that of Ethereum for a few days in 2022. These are these little red peaks here that you can see on the chart. Now, we expect stablecoin market capitalization to surpass that of Ethereum in the first quarter of next year and will continue growing to become 50% or more of Bitcoin's market capitalization. So that is prediction number one. Now, staying on the topic of stablecoins, let's move on to prediction number two. And that is that stablecoins will get regulated by the United States, and it will create a divergence in the market between stablecoins that comply with US regulations and those which do not. And on your screen, you have an article from last week, basically stating that US Senator Pat Toomey introduces the Stablecoin Trust Act, which is a potential bill that could institute a framework for stablecoins. Now, while it takes time to create a legal framework, a lot can be expedited when you add a little public pressure. And while the collapse of 3AC and other international platforms did not inject that urgency into US lawmakers earlier this year, the collapse of FTX did. This is because FTX had a great deal of US clients. They had a US entity. It also had US investors and promoters. US politicians and regulators have been publicly affiliated with Sam Bankman-Fried and received millions in donations from him. They will do whatever they can to save face. In other words, too many Americans were impacted by the collapse of FTX, and American media is all over the bankruptcy case. US regulators will likely jump into action, and the cleanest and arguably most beneficial area for the US to regulate is US dollar-pegged stablecoins. Why? Because it furthers the reach of the US dollar under their oversight, and it creates a natural buyer of US Treasury bonds for stablecoin reserves. Both of these things benefit the US over the long term. So that wraps up prediction number 2. Now, prediction number 3 is that there will be more mergers and acquisitions in the crypto industry. Here's an article that references a similar statement from a few weeks ago. Now, as central banks continue to engineer an economic winter to cool down inflation, all sectors of the economy will continue to feel the pressure. Crypto markets will also feel the chill with a reduction in trading volumes and overall activity. The macroeconomic environment and the recent events in crypto create opportunities for companies to realize economies of scale by consolidating or merging efforts. Layering on top of that, the fact that regulatory costs are likely to increase, this sets the stage for potential mergers and acquisitions in our industry. Likely, it will be focused around centralized entities with complementary products and/or market focus, but it could also spill into DeFi ecosystems as projects look to consolidate efforts and reduce costs further. Prediction number 4 is that regulation in the US will cause changes in product availability for US clients as companies take time to adjust. However, the same regulations will pave the way for banks to start getting more involved with crypto. Now, the article on your screen is a statement from Bank of New York Mellon, which is the oldest bank in the US. And earlier this year, it had stated that it would support digital assets for its clients. A few weeks ago, it came out with another statement saying that it's still committed to supporting digital assets. And we think that this feeds in nicely into this prediction. So regulatory changes are typically done either in a proactive fashion with ample time and consideration for all aspects of the law, as was the general path for the 6 months of this year, or they can be done in a reactive fashion, which opportunistically uses public pressure to rush laws into existence to protect consumers and appease the masses. Unfortunately, recent events suggest that the lawmaking that we will see in 2023 will look a lot more like the latter. Now, this could cause difficulties as companies look to adapt their product offerings to a fast-changing regulatory landscape, and as such, some product offerings may be limited in the US and other highly regulated markets. Now, while this may be an inconvenience to clients, the same regulation should pave the way for more traditional financial institutions to enter the space. This would ultimately result in more options for consumers in the long term. Now, conversely, if the regulations are too restrictive in their approach, it could drive some consumers to riskier alternatives offshore or in decentralized finance, playing a game of whack-a-mole with local regulators. Prediction number 5 is that books will be released highlighting all of the scams and losses that crypto caused throughout 2022. Counterintuitively, these books will draw newcomers to the space as some look to learn more and others look to repeat the fortunes from 2021. Now, the article on your screen highlights that Mr. Michael Lewis, one of the greatest financial writers alive, was spending time with Sam Bankman-Fried writing a book, and he was with Bankman-Fried as the collapse of FTX went down. So let's get into a little bit of what we mean by this prediction. So last year felt like a movie, and who better to write the script than Mr. Michael Lewis? As it is known to many, Mr. Lewis, author of Moneyball and The Big Short, both of which have been blockbuster movies, had been spending 6 months with Mr. Bankman-Fried prior to the collapse of FTX, and he was writing a book about it. Now, there are rumors that Apple is in talks to buy the rights for the book, and while these are all rumors for now, this looks like too big of an opportunity for Mr. Lewis or any other financial writer to pass up on. It will likely make its way to print sometime in 2023, and it would not be surprising to see a TV series or documentary about this hit the media in 2023. Now, yes, the story is about fraud and deception, and no, it is not a good look for the crypto industry. However, this won't stop a mainstream audience from wanting to learn more about the world of crypto after they discover it in potentially this documentary or any of this sort of materials. While many will dismiss the space during an economic downturn, which we are in and will likely continue to be in 2023, others will look to understand it better and be drawn by the potential. Now, there will also be a group that will be inspired by the fortunes that were amassed in 2021 and will undoubtedly want to take a stab at speculating and tinkering within this space. Overall, any big media piece or cult classic movie should provide a boost for awareness and even trading volumes sometime in 2023. Prediction number 6 is that the race to transact stablecoins on Bitcoin rails will heat up. And on your screen, you have a headline from earlier this year stating that Lightning Labs had raised $70 million to bring stablecoins onto Bitcoin. This was from April this year. Now, as mentioned earlier in this issue and throughout our economic calendars, we are bullish on the future of stablecoins. Now, a big driver of adoption will be eliminating the friction to transact in stablecoins. Currently, there is a big arms race between protocols to enable stablecoin transactions as fast as cheap as possible. Now, at the moment, Lightning Labs is leading the charge through its Taro protocol, but they will be joined by others attempting to bring stablecoins to the most secure blockchain around, which is Bitcoin, now the premier proof-of-work network that is left in the ecosystem. Now, outside of Bitcoin, it would not be surprising to see layer 1 or layer 2 blockchains subsidize the use of stablecoins to gain traction. For context, in Iran, where crypto adoption is top 10 worldwide, or which finds itself in the top 10 of crypto adoption consistently, the most used stablecoin there is Tether on the Tron blockchain. This is because Tether is the most widely accepted stablecoin, and Tron offers the cheapest and fastest blockchain to move it on. So expect this race to heat up, and we will continue to pay attention to all the developments from Lightning and its Taro protocol. Prediction number 7 is that gold will top $2,000 per ounce as central banks and sovereign funds start allocating more of their reserves to gold. Now, the article on your screen was earlier this week from Forbes India, and it talks about the prospects for gold doing well in the new year, titled Will Gold Glitter in the New Year? Now, just checking in on the price of gold, we see that it is trading just below $1,800 per ounce at the moment. And going back to our article, let's talk a bit about this because we've been covering this in a few issues back. So, gold has been slowly gaining momentum in the investment community as voices like Nouriel Roubini endorse it for doomsday protection and its doomsday protection portfolio. Now, while gold came under enormous pressure for most of 2022 as central banks raised rates and inflation subdued, it has recently embarked on a solid rally since late October and is currently trading at around $1,800 per ounce, as we just saw. Now, as we've covered here in previous issues, gold is inversely correlated with the real return of the US dollar, which is the interest rate on US bonds minus the rate of inflation. Now, as the Fed has raised rates and has dropped inflation, the real yield for the US dollar has improved for most of the year, and gold dropped from over $2,000 an ounce to a low of $1,660 in September. However, as the Federal Reserve approaches their terminal interest rate, meaning they won't be raising further, and inflation stabilizes, gold should stand to benefit in 2023. Additionally, central banks wanting to replace foreign bonds from their reserves and a potential reopening in China both should act as tailwinds for gold in 2023. Prediction number 8 has to do with both Ethereum and Bitcoin. And that prediction is that after the Shanghai update is live on Ethereum, which would allow users to unstake their Ethereum, once this update gets pushed, Ethereum price should move north of 0.09 BTC. Now, here is the graph on your screen for more context, and we'll go through this in a second. So the chart on your screen shows the price of Ethereum in Bitcoin terms. So as you can see, in Bitcoin terms, Ethereum has been trading in a very tight range over the last 18 months since May 2021, as you can see here from the chart. Now, while it did look like it was going to break the range right around here, this was in June and earlier this summer, this was right around the time where the merge date got confirmed, and there was a sudden rush of interest that brought Ethereum in Bitcoin terms right back into the range. Now, prices rallied right up until the date of the merge, and then eventually it sold off. The old buy the rumor, sell the news adage turned out to be true in this case. Now, however, the merge was only one of the upgrades necessary to enable the full functionality of proof of stake. And here's more details on the Ethereum Shanghai upgrade. You can check out this link in the comment section below. But going back to the graph, The merge is only one of the upgrades necessary to enable the full functionality of proof of stake, as we just mentioned. For those of you who don't know, as it stands today, only users that have more than 32 ETH can stake their Ethereum and earn interest, but they cannot unstake it. Now, the ability to unstake the ETH will start after the Shanghai upgrade, and it is tentatively scheduled for March 2023. However, this has not yet made big headlines given the current context in the markets right now. However, this narrative should pick up early in the new year, and the thirst for staking yield should drive in a new wave of investors, causing Ethereum prices in Bitcoin terms to surpass 0.09 BTC at some point this year. And this is the 0.9 BTC mark that we're referencing. So that does it for prediction number 8. And as always, we wrap up with what's ahead for the week. It is the last trading week of the year, and there is not much economic data that's relevant to Bitcoin to report or on cue for this week. The most meaningful data point for the week came out on Tuesday with the S&P Case-Shiller Home Price Index for the US. This index, which tracks the top 20 real estate markets in the US, saw its fourth consecutive month-over-month drop for October, and it was the first time that every major city in the index showed a reduction in average real estate prices. The average drop in October for the 20 cities it tracks was negative 0.05% or 0.5%. Now, while the index is still up year over year, 8.6% from last October, the deterioration in average home prices across the US is evident. High interest rates are doing what they are supposed to do. Now, what is happening to the US real estate market will soon happen to all other economies where central banks have done similar rate hikes, which basically is most, if not all, of the Western world. As a reminder, real estate is by far the largest asset class in the world, and this is a great chart by Macro Alf. Now, while home prices are dropping, high interest rates have effectively negated the impact of lower prices when it comes to affordability of homes. In summary, as real estate, equities, bonds, and crypto prices drop, this will impact most portfolios. And when people feel that their wealth has been impaired, they are most likely to change their spending habits. This is happening fast. So much so that the risks of the US entering an economic recession next year are high and they are rising. Now, as always, let's talk a bit about what we can expect this week. Tomorrow, Thursday at 8:30 a.m. Eastern, we get US jobless claims. Expectation here is for 220,000 jobless claims, which is higher than last month's 216. However, this number is still too low to be worrisome for the Fed. The US labor market remains very tight, as we've covered here recently. And with that, we have reached the end of today's show. This is the last episode of the year, so I wish you a very happy new year to all of you. Thank you once again for watching us. Really appreciate your support. If you enjoyed the show, if you have any questions or feedback, please drop them in the comments section below. And if you don't yet have a Ledn account, I welcome you to check us out at ledn.io and check out all the products that we offer. Thank you, everybody. Have a wonderful, wonderful new year with your loved ones, and we'll see you in 2023.